Yo, what's good? What's good? What's good? What's good? What's good? What's good? Hey, yo, I'm here to talk about something. I'm here to talk about key levels in the market, right? Here to talk about key levels in the market. And the crazy thing about it is these key levels can be applied to any market that you're trading. If you're trading crypto, if you're trading stocks, if you're trading currencies, if you're trading futures, I'm just playing. I don't really know about futures. I don't know too much about futures, to be honest. But maybe it applies. Here to talk about key levels, different key levels that I'll be talking about, daily key levels. I'll be talking about 4 hour key levels. I'll be talking about hourly key levels. I'll be talking about weekly key levels as well, right? And I'll be talking about the importance of these key levels, right? Cool to talk about them, but why do I even need to know about them? I'm going to be telling you why. I'm going to be telling you why. I'm going to be telling you how to plot these key levels. I'm going to be talking about why they're important. And I'm going to be talking about how they can be beneficial to you when you're trading, when you're making your trades. It's going to be beneficial. It's going to be beneficial because it teaches you how to, one, take profits, two, set your stops, potentially if you want to set stops. And then it's also going to be letting you know, like, as a deciding factor, if you should get in for the trade. Oh shit, do I have a gray hair? Cool. All right, where was I? Oh, fuck. Oh yeah. So placing, yeah. So the key levels will actually help you decide if you want to actually get into the trade, right? Whether you should get in or shouldn't get in. It's so many things and so many reasons why you should learn about key levels and how to use them in trading, right? So without further ado, let's go ahead and jump right into it. Catch you on a little bit. All right. So welcome back to another lesson. In this lesson, we're going to be talking about psychological key levels on the daily time frame, and we're going to be talking about hourly key levels on the hourly time frame. Yeah, hourly key levels on the hourly time frame, and then we're going to talk about support and resistance as well. All right. So first thing first, I just want to talk about these daily key levels. So daily key levels are basically um, levels in the market where price has reacted to this level before, right? So what you'll do is go back into past history, and for instance, I'll start on the daily time frame. I'll find a daily key level from the past, and then I'll highlight it. Once I highlight it, the reason why I highlight it is because if price gets to that level again, or when price gets to that level, it may stall, right? It may not break that level, but I know for a fact price wants to retrace and hit that level again, or push up and retrace, hit that level again, right? These zones that I'm about to mark up are magnet zones in the market. A lot of times people will use past history, like past historical data, old charts. They'll go back and look at old charts to see where price hit and where price stalled in the past for future reference. Because as you know, well, what you'll find out is that everything in this market tends to repeat itself over and over and over again. So if in the past price hit a level of resistance or support and it reacted a certain type of way, more than likely in the future, if it hits that level again, it's going to do the same thing, right? So what I like to do is I like to find daily key levels to start out, because these daily key levels can be good for finding certain levels of resistance. Meaning, whenever price hit this level, it may do one or two things. It may actually break above this level and continue heading up, or it may hit this level and then reverse and head back down into the downwards direction, right? So I'm going to show you how I mark up daily key levels, and I'm going to show you how I mark up support and resistance levels. So first, I just want to talk about what support and resistance is. So support is going to be any level in the market where price reverse off of and head back up towards the upside, right? So this support level, think of it as a floor, right? A floor in the market where a lot of people like to buy um, positions, right? That's going to be the level of support. Then a level of resistance is going to be the opposite. A level of resistance is going to be a place in the market where it's typically a ceiling where a lot of people like to get in for short positions. They like to say, okay, price hits this level of resistance. It's not going to break it. Instead, it's going to reverse and head back down towards the downside, right? So first, I'll show you my daily key levels that I mark up. And these daily key levels are magnet zones because a lot of people, either at banks or retail traders, they see these daily key levels as well as magnet zones in the market. So a lot of times whenever they enter a trade, they'll have it as their take profit. So with them, what a lot of people have in this daily psychological level as their take profit is a high chance of price ending up getting back to that level, right? And then sometimes certain banks and institutions, they like to push price towards these certain daily psychological levels because they have to hit benchmarks, right? Banks, they have like certain benchmarks where they need a specific currency, or it would be more in their favor if this specific currency hit this benchmark number of 156.00, right? Super simple. I'll show you how to mark up zones, and you'll see what I'm talking about. So first off, let's go back to the charts. All right. So we're going to start out with the daily zone, right? And what I like to do is I like to go up and change my charts from candlestick chart to a line chart, right? When it's a line chart, super simple, easy to find the daily levels that I was talking about. All right, so I'll do a rectangle, and for all of my daily levels, I usually make them blue. That's just me, my preference to make them blue, just so I can keep track of which zones are my daily levels and which zones are my hourly key levels. Right? So this first zone that I'm going to mark up is going to be right here. And it doesn't have to be a precise line, because this daily psychological level is not going to be a line in the market. It's going to be a specific area in the market, right? So I want you to get that in your head and kind of get familiar with that. Price not being a daily psychological level, not being a line on the charts, instead being a certain area on the charts. The reason why I highlighted this as a zone is because right here you see price stopped, reversed, and headed back down towards the downside. Right here you see price stop, headed back down towards the downside. All right, and then right over here, history repeats itself. Price came up, retested it, and then failed to break above, and then finally broke above, came back down, retested the zone. Right, you can see the zone is a magnet zone. Price comes back to the zone over and over and over again. Right, and right now price is at the zone again whenever I replayed the charts or rewinded it. Right, so this is another zone. Right, why is this another zone? Because price retested it here. Let me zoom in. Price retested the zone right here, failed to break above, came back down, retested it again, failed to break above, retested it again, failed to break above, finally broke above. And when it broke above with strong momentum up towards the upside, right? Same thing here. Price failed to break above 3 times, reversed back down towards the downside. And then it came back up, broke above. When it broke above with very strong momentum, came back down, retested it. This zone is a zone where price is constantly coming to test this area in the market before heading up, right? All right, then I'll mark up another zone. And over time, you'll start being able to just see the zones over and over and over again, right? You just want to make sure that it's a turning point in the market time and time and time again, right? That's really what you're looking for. You're looking to make sure that this daily psychological zone is a magnet zone, but it's actually a turning point and on multiple days, right? We have a turning point here. 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 Right? It happens over and over, and it'll continue being a turning point as long as price is around this zone. All right. And that's as far as the data goes. But literally, that's all you'll have to do is go into the market, move over to the left side, because whenever you look at TradingView and you look at a chart, everything to your left side is going to be the past data. Everything to the right is going to be future and current data. Well, everything to the right is going to be future data, right? So you want to go to the past data and you want to just mark up daily key levels, right? Why are you marking up daily key levels? Because first, let's say you're about to enter a position and you're right below a daily key level, right? With this daily key level being a strong level in the market, it can either act as a level of resistance or a level of support, right? In this situation right here, we talked about resistance being a ceiling. This daily key level can act as a level of resistance. So it may not be in your best. It may not be in your best. Um, it may not be in your favor to enter a long position right here in this at this current moment in the market. Why? Because you're literally right below a daily psychological level. Right? This daily psychological level can act as a resistance. So let me show you what I'm talking about. So if you were to get in for a long position, somehow, some way the setup occurred on the lower time frames, and you wanted to get in for a long position, and you're targeting this zone right here for some reason. It was a level where you thought this could be your TP. As you can see, this level acted as a level of resistance. This psychological level was a level of resistance, right? This is what I'm telling you. These levels, these psychological levels are so powerful, and you want to make sure that you always know them whenever you open a chart. The first thing you need to do, literally the first thing you need to do, is go to your daily time frame and mark up all of your daily psychological zones. That's the first thing you need to do. And I also mark up weekly zones because weekly zones are powerful too. It's like the higher the time frame, the more important the zones are going to be. So I marked up daily zones, and this daily zone acted as a level of resistance, right? So that's what I'm telling you. On the lower time frames, you may have a nice setup, and we'll talk about setups a little later. But you may have a nice setup, all like three confluences, as to why price is going to head up towards the upside. But on the daily time frame, you're literally right below a daily psychological key level. It's not smart to enter at that current moment in the market because of the daily psychological key level. Of course, price can end up breaking above and heading up towards the upside, but you managing your money and not wanting to lose your money, you're going to say, okay, the signs are there on the lower time frames, but we are super close to this daily psychological key level that can act as a resistance. So I'm not going to get in for that trade. And you not doing that, you save yourself a lot of money. Right? That's all I'm saying. That's why the daily psychological key levels are so important. And the same thing can be said. So I told you it can act as a level of resistance or support, which is true, but it can also act as a level of where you take profits in the market. Let's say a setup occurred right here and you decided to get in for a long position, right? Stops somewhere over here, and you decide to get in for a long position. Your TP is 263 pips to the next psychological key level in the market, right? You play it, you let it play out. Price went right to that daily psychological key level and stalled. I'm not making this up. I'm not making this up. Daily psychological key levels are so powerful in the market. Like, they're so powerful in the market, and not many people take advantage of psychological key levels in the market and mark up. A lot of people don't even know about it. But it's so key, man. It's literally so key. I just marked this zone up, and literally it acted as a take profit for my trade. Right? It's so powerful, man. So powerful, so powerful. All right, cool. So we marked up daily psychological key levels, and then also I want to talk about marking up zones on the hourly time frame as well. I'll mark up zones on the hourly time frame as a level of support and resistance. Support, I don't really use support and resistance, but some people do. People look at support being this zone right here. And once again, support is a level in the market, and I'll make my green zones levels of support on the hourly time frame. That way we're not confusing them with daily psychological key levels. Let's go back in the past. All right, so this right here is the level of support. And support, a lot of times, and this is why I don't really use support and resistance per se. I just mark up hourly key levels, because support, you remember when I said support acts like a floor where people like to get in for long positions, get in for long positions headed up towards the upside. Well, once support is broken, right here, support was broken. Later on, support acted as a level of resistance. So it's not acting as a level of support anymore. Now it's acting as a level of resistance. Price came up, retested his level as a level of resistance, and then fell to break above and return back down to the psychological key level. So the market moves level to level, right? Either you're moving from a daily key level or you're moving to an hourly key level. Or sometimes you may move from a daily key level all the way down to another daily key level. The market moves in levels. It's your job to find out what the trend is currently, wait for a setup to occur, and then just trade to one of the daily key levels or hourly key levels. That's literally it, bro. That's literally our job, right? It's literally our job. It's so simple. A lot of people overcomplicate trading with indicators and too many like moving averages, and they'll wait for so many things to happen. I don't trade like that anymore. And ever since I stopped trading like that, the market has gotten a lot easier for me, right? So I'm gonna mark up another hourly key level just to show you how powerful these levels can be, right? So let's say I marked up, and once again, I don't mark up support and resistance levels. I just mark up key levels on the hourly time frame. So my key levels on the hourly time frame is going to be um, colored in green, right? And literally, this is the lowest that I will go to mark up key levels. I'm not going to mark up key levels on the 30-minute time frame, 15-minute time frame, or 5-minute time frame, because marking up key levels on those time frames, they're not going to be as respected. Do you see how whenever price hit this daily key level from the daily time frame, it reversed, headed back down towards the downside? You see how powerful this level is? Key levels on the 30-minute, 15-minute, 5-minute is not that powerful, right? Price will end up breaking above it, come back down below it, and it'll basically act. It's not enough people in the market respecting the levels on the 30, 15-minute, 5-minute for us to actually take it into consideration, right? So you shouldn't trade based on levels from the 30, 15-minute, 5-minute time frames, right? All right, cool. So let me show you how powerful these levels are. So let's say, once again, let's say that our setup that we'll be talking about a little later on, our setup happened on the 15-minute time frame. Everything aligned. We're trading in line with the trend on the 4-hour and the daily time frame. Everything's looking good. So now we want to get in for a long position, right? And our TP1 is going to be this green zone, this first hourly key level. And TP2 is going to be this next hourly key level. And I'm not saying our setup already happened, because it didn't. I'm just trying to use this as a reference. Okay, so TP1 literally got hit. TP1 got hit for 127 pips. So by that time, depending on if you're actively trading or not, you should have been out of this trade and you would not have gotten stopped out. You know what I'm saying? Literally, price hit TP1. I swear to God, I did not know that price was going to hit this psychological key level. Not psychological key level. This hourly key level. I didn't know. But because I marked it up from past data shown me that price gets to this key level and reverse. Head back down towards the downside. Price gets to this key level, reverse. Head back down towards the downside. Because these hourly key levels are magnets, I know that price is going to want to hit one of these zones before reversing back down towards the downside, or hit one of these zones and continue heading up, right? And as you can see, it happened. It literally happened right here. Hit that first zone, and you would have been good for 127 pips. And then price pulled back. I'm not saying it broke structure or anything like that, but price pulled back. Right, so price ended up just pulling back. And I'm almost positive that price is going to hit one of these zones again, stall, and then possibly continue back up. Look, okay, so it hit that first zone. Where is it going next? Hit that first zone again. Hit the second zone, started stalling out, and then it broke the second zone. And now where price going? It's only one place price can go. Price is going to that daily key level. That's what I'm telling you, bro. Price moves from level to level to level to level. A lot of people in the market, they're not trading from one level to another level. They don't even know about daily key levels. They don't know about hourly key levels, or maybe they know about them, but they don't use it. But I use it. And that's why I'm able to make bread that I'm making in the market when I do, right? So that's just one lesson on how powerful hourly key levels are and how powerful daily key levels are, right? These are the only two time frames that I want you guys marking up levels on. And then if you want to get really responsible, you can go to the weekly time frame and mark up key levels on the weekly time frame as well, right? Because these weekly levels are super important, right? Price almost never gets to a weekly level and not react to it. Price always reacts to the weekly levels, right? These are weekly levels that I've already annotated. Price got up to this weekly level right here and then reversed, headed back down to another weekly level. Then once price hits this weekly level, created a level of support, bounced off, headed back up towards another weekly level. You know what I'm saying? So make sure you mark up the weekly levels too if you want to. It's all up to you. I would say mark up weekly levels, daily levels, and then hourly levels. I don't really mark up levels on a 4-hour time frame because it's so closely related to levels on the daily time frame. I'm just telling you what works for me, but you can if you want to. I don't like clogging up my charts. I don't like having too much stuff going on my charts. So I just mark up levels on a weekly, daily, and the 1-hour time frames. And it works. As you can see, it literally works. Price moves from level to level to level. That's what I'm telling you. Here's another level right here in the market. Another level of another key level on the hourly time frame where price respected. Each time price came down, it respected this level. Each time price respected this level. And I'm pretty sure if price ever come back down this low, it's going to respect that level again. Let's watch. Bro, you cannot make this up. Price failed to break above this daily key level, came back down, bounced off this key level we already marked up on the hourly time frame. Bounced off that daily zone again and then found another level of support at another hourly key level. I'm telling you, it works, man. It works. It works. You can't tell me it doesn't. It works. So I want you guys to go practice now, marking up key levels on the weekly time frame. And don't clog it up. You don't need 1,000 lines. As you can see on my charts for the weekly time frame, I'm only marking, let me show you. I'm only marking turnaround points in the market on this time frame, right? Where did price turn around? Price turn around here. Price turn around here. Price turn around here. Price turn around here. Right? And then I'm marking where I see price turn around. If it happened consecutively, at least twice. If it happened twice at this same level, then I'm going to mark it as a level. But I'm not marking just any random turnaround zones. I'm not doing that. I'm marking right here. Price happened twice. Or price happened to turn around twice at this zone. Right here. Price happened to turn around twice at this zone. Right? That's how you mark up your weekly zones. Same thing goes for your daily. You want to find places in the market where the market's turning around at that zone over and over. It's creating a level of rejection at that zone, right? You see wicks there. These are what you call wicks. That's what you want. And you don't need a lot of zones. On the daily time frame, which is my blue zones, I only have a couple blue zones here. Right? It's not everywhere. I'm not going through, and literally when I first started trading, I would go through and just, anytime there's a turnaround point, boom, 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 boom. And I'm making like 1,000 purple lines and my charts are clogged up and it looks like some craziness. So try not to do that. Try to make clean charts. Try to make clean psychological levels on the daily, and try to make clean hourly levels on the hourly time frame. All right. Hope you guys enjoyed this. I hope you guys took something away from this video. And if y'all can take anything away from this video, it's the power in daily key levels, the power in hourly key levels, the power in weekly key levels, right? These levels are magnet zones in the market, and price will constantly hit these zones over and over and over again, right? So hope you guys learn something from this lesson, and I'll catch y'all in the next one. Peace.